I've consulted with thousands of business owners, and I see the same mistakes happen over and over and over again. Here are the top 3 mistakes that I see new business owners make. Number 1, they don't keep their business money separate from their personal money. Number 2, they're not writing off all of the expenses that they can write off. They're leaving money on the table. And number 3, they're not staying organized, which makes number 1 and number 2 way harder. In this video, I'm going to teach you why each of these is a problem and how to fix it so that you don't have to make the same mistakes. Let's talk about number 1, separating your business money from your personal money. The reason this is bad is because if all of the money that you have, both personal and business, is all going into one account and you're spending that money on personal and business expenses, how do you know what's what? It becomes a real problem. Even with accounting software and bookkeepers, it's still very difficult to tell if that Amazon purchase was for you or if it was for the business. And that makes things really, really hard to deal with. In fact, there's a term for it. It's called commingling funds or commingling assets, and it is a big no-no, and the IRS does not like it. If you have a business but you're commingling assets, the judge and the IRS is going to say, dude, you do not have a business. You're using only one bank account. How are we supposed to believe that you have a separate business? And that's the problem right there. It sets us up for failure. In order to set ourselves up for success, we need to separate those two things. We don't want to pierce the corporate veil by mixing everything together. So what we want to do is we want to have a separate personal account and a separate business bank account. When we have personal expenses and personal money that needs to be spent, we spend it out of the personal account. When we have business expenses or anything that we need to spend money on to grow our business, we can spend it out of the business account. Now, you might be saying, well, Evan, that's all well and great, but what if my business is how I earn money? How do I get money from my business account into my personal account? That's a great question. The answer is very simple. You need to pay yourself properly. Once you have things separated out, you're going to have all of your business income going into your business bank account. You're going to spend that money on business expenses, inventory, materials, payroll, cell phone, internet, gas, etc. Eventually, there's going to be some profits left over. Now, when there's money left over in your business bank account and you want to spend it on yourself or pay yourself with it, you do one simple thing. You transfer it from your business account into your personal account. You label it as an owner's draw in your accounting software, and that's it. You're done. But you can't pay yourself properly unless you have separate accounts. So then you might be asking, well, Evan, how do I get a separate business bank account? Because I just have one right now, and I don't know what to do. All you need to open up a business bank account is an EIN. Now, I recommend that you begin by getting an LLC. An LLC stands for Limited Liability Company, and you can open one up in the state that you're doing business. Watch this video here if that's something you're interested in. Once you have your LLC established, you can go get an EIN for that LLC. It's kind of like attaching a social security number to your business. Now, once you have your LLC paperwork and your EIN, you can go open up a business bank account. And they're going to ask for a couple of things, those 2 pieces of paperwork being 2 of them. Now, you can open a business bank account wherever you want. You can choose the big guys like Chase and Bank of America. You can use a local credit union like I prefer, or you can open one up online. And if you're looking for business bank accounts to open up online, here's a list of 10 that I've already pre-vetted, 10 places that I know will take good care of you at least. Now, when you're opening up this business bank account, they're going to ask you for your LLC paperwork and your EIN, so make sure you have those with you. They're probably going to ask for one more thing though, and that's your NAICS code. It's a number that identifies what your business does. It's very easy to look up. You can use this website right here. But if you know what your NAICS code is before you go into the bank, they start asking you questions like, all right, sir, what do you do for business? What kind of goods and services are you providing? You could say, excuse me, are you trying to figure out my NAICS code? And they're going to say, well, as a matter of fact, I am. I already looked it up for you. It's right here. And they are going to be so impressed. In fact, I wouldn't be surprised if this set the tone for the whole conversation and they started treating you differently because of how prepared you came. Anyways, that's how you open up a business bank account. That's how you can solve that problem, to keep things separate. Remember, business money goes into the business account, personal money goes in the personal account. I mean, well, Evan, what do I do with the check from grandma that I get on Christmas? That doesn't go in the business bank account. Nope, it goes in your personal account. Personal money can go into your personal account. Just make sure business money stays in your business account. Keep them separated, do yourself the favor, and it will make your entire life easier. This leads me to number 2, not writing off your expenses. You see, a write-off is any money that your business has to spend in order to make money. And the IRS, Uncle Sam, they make it very simple. A write-off is anything that you need to spend money on to grow your business. As long as it's regular and ordinary, you're good to go. So now that our accounts are separate and we understand we're only going to spend business money out of our business account, it makes it much easier to start keeping track of these business expenses. Do you see why we separate them now? When looking at your business account, you're going to have all of these expenses that are coming out, all of this money that you're spending on your business to make money. All of these things are write-offs. Let's just say, for sake of discussion, that you made $100,000 selling t-shirts and you had everything go into one account, and then you filed taxes at the end of the year, and Uncle Sam says, holy cow, this guy made $100,000 this year. Oh, we're gonna have to charge him about $35,000 in taxes. Made a lot of money. That's a problem. You just had to pay way more in taxes than you should have, because you and I both know it cost you money to earn that 100 grand. You just didn't write anything off. So here's how it works. You do not have to pay taxes on the money that you spend to make money. Here's a good example. Let's say you made $100,000 selling t-shirts, but you had to spend $20,000 on the actual t-shirts. You had to spend $20,000 on labor. You had to spend another $20,000 on marketing. And then you had to spend another $20,000 on fees and shipping. You know, that's 80 grand in expenses. So you had to spend $80,000 to make $100,000. Well, when you file your taxes, you're gonna tell Uncle Sam like, hey man, I spent this 80 grand to make this 100 grand. So really, I only made $20,000. That's my profit. This time, Uncle Sam's gonna say, hey, you made $20,000 in profit. You owe us some taxes. It's gonna be about 3 grand. The difference is huge. And that's because you needed to spend money to make money, but you can't tell Uncle Sam how much money you had to spend unless you keep things separate. You have to keep your business account separate from your personal account so you can articulate to the IRS what you spent your money on. Paying taxes on $20,000 of profits is a lot less than paying taxes on $100,000 worth of profits. It's a difference of about $30,000, which is very significant. I see this happen all the time. Business owners leave a ton of money on the table because they're not keeping things separated, which is not allowing them to talk about their write-offs and properly document them, which is causing them to pay way more in taxes than they should. That's a big deal. That's a $30,000 decision right there. And this leads me to number 3, staying organized. Staying organized is a superpower when it comes to running a business. I mean, it's a superpower in general, but especially when running a business. Let me explain. To me, being organized means you're able to find things when you need to find them. And that's a simple way of putting it. I'm going to give you an example of what being disorganized looks like and what being organized looks like. A disorganized person would go to Home Depot for a job, spend money on the credit card, shove the receipt in their pocket, go do the job, put the receipt in a drawer somewhere, and not even deal with it. A disorganized person won't keep track of their receipts. A disorganized person will spend cash. A disorganized person will get an email receipt and do nothing about it. A disorganized person doesn't know how much money they have, they don't know how much money they spent, and they're going to end up having to pay a lot more in taxes than an organized person. The organized person goes to Home Depot, swipes their credit card, gets his receipt, but instead of shoving it in their pocket and dealing with it later, they pull out their phone, they open up QuickBooks, and they snap a picture of that receipt before they put it away. They're cataloging it. They're making sure they have the proper documentation. When they get emailed a receipt from the logo design that they just did on Fiverr, they take that invoice and they upload it into a Google Drive folder titled Receipts and Invoices 2023 February, and it goes right into there. An organized person will only spend business money on business expenses and personal money on personal expenses. That way, at the end of the year, it's very easy for them to give all of their expenses to their tax person. An organized person is going to pay way less in taxes than a disorganized person. And that's because they have all their ducks in a row. Information is power. And the reason I say that is because 99% of the tax code are ways to save money. So if your CPA says, hey, did you spend any money on research and development? You can look at all of your expenses and say, yep, here, here, and here. And you can start saving more money on taxes. But if they were to ask you that same question and you were disorganized, you wouldn't know and you would miss out on those tax savings. Being organized is key. It's key when you have employees, it's key when you're managing jobs, it's key as a business owner. And learning the skill of staying organized, or at least putting the infrastructure in place to stay organized, will help you a ton. So you might be saying, well, Evan, how do I stay organized? How do I even do that? Like, I don't get it. Let me give you some tricks of the trade that I have. First thing that I have is a Google Drive folder. I set that up online with a Gmail account so that whenever I have a receipt or an invoice, I can easily upload it to all of my folders and keep track of all of my paper receipts or my digital ones. This way they won't get lost and the receipt paper that fades over time won't be illegible. I'll be able to read it. And most importantly, I'm able to search these databases on a computer and I don't have to go through things manually. That's a really big deal. So get yourself set up with a Google Drive so you can start saving things. Another thing that really helps is accounting software. I religiously use QuickBooks for all of my business. You don't have to use QuickBooks. You can use whatever you want. I don't care. But the important thing is that you connect your business to something that can keep track of the money in and the money out, the money on the credit cards, how much you've paid off on the credit cards. You need a way to send invoices to people. You need a way to collect money from people. And QuickBooks can make that happen really, really easy. Never underestimate the power of convenience. QuickBooks makes things very convenient and it is hugely helpful when staying organized. The last thing is Notion. Now, this is totally optional and you only really have to get into this at a certain point in your business, but I use Notion to keep track of all of my important business details. It's a database where I can store numbers and spreadsheets and I can collaborate with other people. I can write, I can use their AI tools and I can break things down and have project management and do all kinds of cool collaborative tasks. I store all of my SOPs in Notion. I store all of our data and formulations and trainings and instructions in Notion, and I even have a whole product launch calendar. In fact, this video, when I'm done with it, is going to go into a video creation board on Notion, and I'm going to collaborate with a few other people to get it edited and put out there so that it's a really nice product for you. Staying organized is a superpower, and if you can pull it off, oh my gosh, it is going to help you so much. You like the way that I teach? Check out My Accelerator. It's a community I started for people like you and me where we can get to know each other. You can go through all of my video trainings, get access to all of my legal docs and everyone that I recommend in the business, and you and I can personally work together. Otherwise, check out this video next because I think it will be really helpful.